And we are very lucky today to have a special guest with us, Mr. Sheel Tyle. A brief introduction on Sheel. He's the founder and CEO of Amplo, a global venture capital firm helping building companies that matter. Amplo's portfolio companies include Robinhood, Parsley Health, One Concern, and Andela. He is a member of the board of directors for Andela, most recently named the #1 innovative company in Africa by Fast Company. As an angel investor, Sheel has invested in seed or Series A of Casper, Flutterwave, Robinhood, and The Wing. Sheel graduated from Stanford in 3 years at the age of 19 and holds a JD from Harvard Law School. He is a World Economic Forum global shaper and was on the Forbes 30 under 30 list in 2013. In 2016, upon invitation of the White House, Sheel was part of the US delegation with President Obama on his historic visit to Cuba. Thanks for being with us today, Sheel.
Yeah, it's great to be here, guys.
Thanks. So I guess we just want to start off, even though I know I gave a little bit of background. Could you just introduce yourself, talk a little bit about your background, your family upbringing, things like that, for our members and students on the call, please?
Yeah, so I am the son of immigrants, probably like many folks on this call. Both our parents came from India. My dad applied to schools that didn't have an application fee, and my mom, first week in America, thought immigrants got free housing, and so she went to the homeless shelter. But that was not actually how life worked. And through hard work and perseverance, they were able to achieve their American dream. And everything that we have, and whenever I say we, I'm sort of referring to my younger brother and I feel like is a result of their hard work. And one thing they tried to instill in us from the very beginning was we had been given a lot more than they ever had. And we could either use that for our own personal gain, or we could do it to help folks like them get a shot. And, through sort of a journey of sorts, I ultimately believed and came to the realization that one of the best ways to create transformational social change is through entrepreneurship and capitalism. I actually think it's one of the most sustainable ways to do it. It's one of the best ways to do it at scale. And so I started my career at a startup that was later bought by Google. And then I became a venture capitalist. And what drew me to venture capital was as I studied stories of various companies, I realized that behind every great entrepreneur was a few people who supported him or her. And those people were first and foremost family. But besides family, it was angel investors. It was venture capitalists. And it was folks who believed in that person. I was like, that sounds kind of fun. I kind of want to be involved with the next generation of job creation and industry transformation. And so that led me to become a venture capitalist. And I worked at 2 big firms, a firm called Bessemer Venture Partners and then a firm called NEA, before starting my own in 2017 called Amplo. And that's what I run now.
Yeah, I mean, it's a very, I think, inspiring story. I remember I met you back a couple of years ago. I don't know if I ever told you this, but I think you really changed my perspective on how we should really view the world and such. So, it's really important and interesting for me as well. So, kind of moving here to the next question. I think you talked a little bit about this, but I had a chance to go through, I think your website, sheeltyle.com, the blog that you've written, and you kind of talked about how that.
Man, I haven't updated that in years. I didn't even know that still exists.
Yeah, no, I went through it and I was like, because there was a lot of interesting things that you'd written about on there. And I think something that struck me was, you had all these like offers from all these other firms and you went and talked to your professor. I don't know if this is what I want to do. And he said, you should craft a career, like try to just come up with a career, what you think is important, right? And so you kind of talked about how venture capital is a driver for social innovation. Can you go deeper on that? And like, you're like, I guess just go more deeper on that thought and eventually, how did you break into that industry, right? Because it is a very tough and selective industry, I guess. And, with a lot of college students on this call, I think they'd be very interested to hear, how you ended up breaking into the industry.
Yeah. So, all right. To answer your first question, there was a company called Sheel Tyle that really inspired me. Sheel Tyle brought the mobile phone to Africa, completely transformed the continent. Pre-Sheel Tyle, a woman having a kid had to yell for help. Post-Sheel Tyle, she could pick up the phone and call. And that simple innovation, the mobile phone, transformed the continent. I mean, literally, it completely changed how people lived. And that story I learned was there because you had an amazing entrepreneur, a guy named Mo Ibrahim, and venture capitalists who believed in him. And as I studied that story and others like it, that was what actually inspired me to get into venture. First, I was like, I kind of want to be an entrepreneur. And then I figured, you know what? It would be really fun to work with many entrepreneurs. And it sounds like the role to do that is as a venture capitalist. So I went to Stanford, and in college, there was a particularly large emphasis on entrepreneurship as a driver of change, right? And what I did, I feel like everybody else, I tried my own hand at startups. I tried this thing and then that thing, and most of them, actually, all of them failed. But it was really an amazing experience because I feel like I learned what I was good at and what I was not good at.
Mm-hmm.
And that was around when I actually heard about, for example, the story of Sheel Tyle and stories of Google and Facebook and whatnot. And I was like, how do I get into this thing called venture capital? So what I did is I started doing a lot of free work for venture capitalists. I knocked on the doors of a bunch of venture capitalists and was like, hey, I'm this kid, I'm a freshman or sophomore, whatever I was. And I kind of just want to help you. Like, is there any way I can help you? And I think one of them replied, and he said, all right, well, why don't you help us? If you see interesting opportunities, send them our way. And if you want to do some diligence on some of our opportunities, great, free labor. And I did that for them. I actually thought that was an awesome opportunity. And so I did that, and I did that, and I did that. And eventually, I actually saw this firm, Bessemer Venture Partners, was hiring an analyst in New York, but they weren't recruiting at Stanford. And so I was like, I emailed the guy who I had been doing free work for, and I was like, hey, do you know anybody at that firm? And he said, of course, apparently all venture capitalists know each other. And so he sent my resume to him, and that got me in the interview process, which eventually led to a job. And so that's, I often say that that's what it takes. It takes a lot of hard work and perseverance, often for free, to lead to a job. And now, almost 10 years later, now I'm getting paid to do it, which is great.
Yeah, I think, last week or a couple of weeks ago, we were lucky enough to have Mr. Alec Ross, who you know and is on your board. And he kind of spoke about the same thing of just having this very strong perseverance and drive to do, what you think is right and what you really want to do. So, now that you've started Amplo, right, and you've, had this, I guess, experience of, investing in all these companies, what are some lessons that you learned from starting your own fund? And I think one thing that really, was like odd to me at first was this amazing group of advisors you've brought together, from Australia's Prime Minister to, the United States National Security Advisor, Susan Rice. Just how did you do that? And, what are some lessons you learned from in your time running Amplo?
So when I started Amplo, I was drawing upon the learning of my past experiences working with entrepreneurs. And what I learned is there are two types of people who add a lot of value to entrepreneurs. One are other entrepreneurs, folks who could guide them, who are probably a couple years ahead of our entrepreneurs. And then the second are business and political leaders who can open doors for our founders. They can help them through regulatory challenges or introduce them to customers or potential acquirers. And so as I started Amplo, I wanted to build a firm that was heavy on those types of people. Heavy on operators, i.e. the entrepreneurs, and heavy on, leaders, however you define them. And so what I did is I just went to everybody who I knew, and I was like, I'm starting my own firm, and I'd love to have you be involved. all I can promise you is we're going to work with some of the most interesting entrepreneurs in the world. I have no idea how I'm going to pay you. I have no idea how much you're going to get paid, but that's all I can promise you, and we'll figure it all out later. And surprisingly, that worked. So one of my good friends is Whitney Wolf, the founder of Bumble. I told her that very pitch, and she was like, Sheel, sign me up. Then it's like, once I got Whitney, then I got Vlad, the founder of Robinhood. And then I went from there to, different people. And it was similar actually on the board partner side, which is what Alec is and what Julia Gillard is, who you referenced. It was similar. It started with one person. And then once you go from one person, then it's sort of like a spider web. It just keeps expanding. And now I just feel really fortunate to have these people involved, and they're very involved. I mean, this is not, I actually don't like to use the word advisor, because they're more than that. We have partnership meetings where companies come in and present virtually. And the CEOs, and these could be existing portfolio companies of ours or potential portfolio companies of ours, they'll come in and present. And every single one of our board partners video conferences in. Susan Rice, for example, has never missed a meeting. And I mean, she had her VP, she was potentially being vetted for a VP, and she was still showing up to Amplo meetings. And I was like, don't you have more important things to do? But it's a really engaged group. And I think it's an engaged group because they just like learning about the next wave of innovation, and they've torpedoed deals. I mean, I've had situations where a couple folks ask really strong questions and the answers are not satisfactory. And so they will ultimately vote. I go around and have people vote. They will ultimately vote against the deal, which is the exact type of consensus or lack of that I'm often looking for.
Yeah. So, I mean, I guess they're coming into these situations with a lot of experience on hand, which is exactly what you want. And I think this is a great segue to the next question here is, so there are a lot of venture capital firms out there. Is there a specific approach that Amplo uses? And, how do you differentiate between these good and bad companies per se? Or these companies that are, the companies that you really want to invest in, or the ones that, are not ready yet? How do you make that choice or decision?
So we look for an entrepreneur that meets 3 criteria. Young, not in terms of age, but how you think. We want people who are nimble, who are focused, who are resilient, global in their ambitions. We believe the biggest companies in the world are global. By definition, you're solving a global problem. And then the third and most important is we call it building companies that matter, which is deliberately vague. But the reason that I say that is throughout my career, I have learned that the biggest companies in the world are created by entrepreneurs who are not motivated by money. Mm-hmm. I think if you're motivated by money, you tend to not make any. But if you're motivated by solving a really big problem, that's how you ultimately build something that matters. That's how you say no to acquisition offers. It's how you hire people when other people can probably pay them more. It's how you fundraise when sometimes it's not easy to fundraise. It's how you get through hard times. And that only happens, in my opinion, if you're motivated by a mission. So it's deliberately vague. I mean, it's not a stage focus. It's not a sector focus. But that's how we have compiled our portfolio. I mean, our portfolio includes, Robinhood, a financial services company, or 2 Chairs, a mental health company, or Mark 43, a public safety software company. So really spans the gamut.
Yeah, I mean, I think because when we were looking through, or when I was researching you for this talk, there is a wide variety of fields that Amplo covers. I mean, like you said, automation, health, disaster relief, things like that. It's just, I was just wondering, how do you figure out, that these companies are going to be solving these global problems? Is there something specific that also the teams matter that are doing these things?
Say that one more time.
Like, how much does the team of these companies matter? How do you, I guess, gauge when you're looking at these companies if they're going to be successful?
Team matters a lot. I mean, that's why for us, we are really trying to dive into their motivation. Like, why are they doing what they're doing? How strong is this team? What is unique about this team that will let them run through a wall to achieve success? We don't really care about like where they went to school, for example, or what they've done before, because we actually don't think those are good predictors. They can be signals, but they can also be noise. And so we just think the better thing is using our intuition and really trying to gauge thoughtfulness of the founder.
Yeah, I mean, because the reason I'm asking this question is because we have a lot of students in the audience, people that are interested in entrepreneurship, figuring out, how they can kind of move into this next level. You having seen all these companies and people and such, what are a couple, most important skills that our students today can start to learn and to be successful in this coming decade and the future?
So Alec actually used to say stamps on the passport. I don't know if he said that when he spoke to you guys before. That's a little bit more complicated in the COVID world where nobody wants Americans. But I think the general thought of travel, and basically understanding how the world works in societies that are very different than yours, I think is a huge competitive advantage. Because all of these companies that end up being very large companies, by definition, become global, and your ability to navigate different cultures and different languages and different ways of doing business and different ways of thinking, I think lends yourself to any job that you do. So on that front, I completely agree with him. I think another really important skill is communication. I actually think it's underrated. I think a lot of folks often say you should go get a real skill like a hard science or an engineering or something like that because that is directly correlated to a job. But what I have found is some of the best people, some of the most successful people across industries, whether it's politics or the nonprofit world or for-profit, they're just excellent communicators, and if you can write well and speak well, I actually obviously from a place of substance, then I think that it's a huge competitive advantage. I think a lot of that comes from reading. It comes from reading a lot. I think folks can often start to imitate what they read, and I think that could be a huge advantage.
Is there anything specific that you've been reading recently that's really caught your attention?
I'm actually reading a book. It's right there. It's called Doing Justice by Preet Bharara, the past SDNY U.S. attorney. And I think it's just a really good book. I went to law school, and so I really love reading legal type books about, the strategy of different cases and why certain cases came out the way they came out and what was going on behind the scenes. So that's the type of stuff I like to read, but I read various random things.
Yeah, I mean, and then I guess another tangent, just because you kind of talked about briefly here, what came in your decision of attending, I guess, law school per se? Because, people usually say, oh, VC, you need to do investment banking, whatever. Why did you choose to do JD, and how does that help you in your everyday job as a venture capitalist?
So I was actually originally doing my JD MBA. I ended up only completing the law piece, but the reason was I was very interested in the law degree, largely because I feel like entrepreneurship and capitalism, as I mentioned earlier, can solve a lot of problems, but it doesn't solve every problem. I mean, irrespective of one's politics, look at gun violence in this country or affordable housing or criminal justice. I mean, there's so many issues that to me can't really be solved through law and policy, through capitalism. And if you can't solve it through capitalism, it's probably through law and policy, right? And so I applied to law school just wanting to understand how are these types of problems solved. Mm-hmm. And it was an absolutely amazing time. I mean, if you're interested in those types of issues, I think law school is an amazing experience. My criminal justice professor, my first year of law school, a guy named Ron Sullivan, awesome guy, former head of the DC Public Defenders. He testified on behalf of Trayvon Martin in front of the US Senate. And I went to law school during Ferguson, and it was just to hear that type of perspective was something I would not have gotten investing in startups in Silicon Valley. But guess what? That issue actually affects more people than sometimes some of our startups are impacting, at least certainly when they're starting.
Yeah, I mean, I think it definitely helps, analyze a lot of situations and, looking down at these problems from a I think, top-down approach, or looking at them from a wider perspective, I think it is very useful in that sense. So here, this was our last, I think, scheduled question from our end, from PEAC's end. If the audience has questions, please post them in the chat and I can call on you here to ask Sheel your question. And I'll actually start off here with Vaishnav, who I think already had a question for you, Sheel. So Vaishnav, if you come off mute and just share your question.
Sure. Hey, Sheel, thanks for being here. Really appreciate your time. You talked a little bit earlier about how your parents helped you develop this global perspective, and how that's played a very large role in, who you are today. And so I'm curious to hear from your experience dealing with entrepreneurship across the world. What can entrepreneurs in America, and specifically maybe Silicon Valley, learn from entrepreneurs, let's say in Africa, or other parts of the world that you're dealing with?
It's a really good question. I haven't been asked that question before. So one of the things that I am most inspired by when I travel, or I should say pre-COVID used to travel to emerging markets, was the concept of frugal innovation. I think in India, the word is jugaad. And it's basically this concept of using not very much money to solve a very simple and interesting problem. I mean, it's sort of the equivalent of, like, if you ever played cricket in India, instead of using stumps, you would use a box, right? Or you would use a tree, right? That is a simple and frugal innovation. And a lot of great types of companies and ideas have emerged from the idea of using that frugal innovation. And so, money, often people think the more money you raise, the more resources you have, the more sales dollars you have, and therefore the more customers you get. But I actually think there's a lot to be learned from using these frugal innovations to solve problems and then scaling them up over time. I mean, there's, in India, there's the Aravind Eye Institute. And I think so first of all, they do more cataract surgeries than I'm pretty sure any other hospital in the world. And a lot of it has been driven by frugal innovation. And a lot of it, as a result, has been driven by, because it costs so little, they've been able to scale it up and do so many at such a cheap price point. And it's not just based on the cost of labor. It's also based on the technology, that the success rate is far higher than anywhere else. And so, I mean, there are things that we Americans can learn from places that may be considered more developing, but are certainly equally as innovative.
Thank you for that. So, I think the next person is Markel. If you want to come off of mute and share your question here.
Yeah, sure. So first, thanks for speaking with us today. I do have a question that may seem a little bit nuts and bolts, but forgive me if it's too technical. But recently, we've seen these SPACs happening all across the investor sector. I was wondering, from your perspective as a VC, as a head of VC, how does that influence or disrupt traditional models of investing from your perspective?
Yeah, so good question. So SPAC, special purpose acquisition vehicles, it's this new sort of trend, for those who don't know, of folks essentially creating blank check companies, taking them public, and then using them as an excuse to either majority investor, completely acquire private businesses. It's sort of a backdoor into taking companies public. So there's some pros and cons. I mean, the pros are that it's a faster way to go public for private companies. The cons are it is actually more expensive than a traditional IPO. If you bake in the sponsor fees and the warrants and whatnot, it actually becomes more expensive than just going down a traditional IPO path, and certainly more expensive than a direct listing. I also think that there are far too many SPACs right now. I mean, everybody and their mother is raising a SPAC. And so as a result, the quality of SPACs is going to go down. Literally 2/3 of my companies have been approached by SPACs, and most of them are not ready to go public. And so I think it's a little bit of a bubble. I've been approached to start a SPAC, which is the sign of a bubble. And it's just, I think the people who benefit the most from SPACs are the sponsors. In other words, the person starting the SPAC. And there's a great Matt Levine article. Matt Levine is a Bloomberg writer, and he basically breaks down the cost behind doing a SPAC. And all the people who are starting SPACs are like, oh, it's cheaper and better because the target company only has to deal with one person to price their IPO, and it's faster, but it's all out of self-interest. And so I would recommend reading the article by Matt Levine on the true hidden costs of SPACs.
Thanks.
I think our next question is from Shashrik. You want to come off mute and...
Yeah. Hey, Sheel, thanks for talking with us today. So my question regards kind of your approach. You talked a little bit about your approach for investing in companies. So I'm mainly interested in the technology area. So there's like a lot of companies using like AI, machine learning, these buzzwords per se. So when you're looking at investing at per se a tech company, how do you evaluate the different technology stacks that they're using, and what are some key factors you look for in those companies?
So I'm not very technical, as my background. I got a graduate certificate in a form of engineering, which doesn't really mean anything. And so I don't pretend to know as much as the founders of these companies. And so when we evaluate businesses, we really do it from the perspective of team, market, and assessing product, not in terms of its engineering, but in terms of its customer adoption. For very technical stuff, so for example, we have an autonomous vehicle company. Very, very technical. It's essentially machine learning. We have folks who are part of the Amplo network, either investors or board partners, or you sort of name it, who have far more technical expertise, really go dive in and just understand what's happening and how proprietary something is.
Thank you. Sorry.
I think Eric Jin has a question. You want to come off of mute and ask it, Eric?
Okay. Yeah. Hello.
Yeah.
Okay. Yeah. I guess I was thinking of a question, but I do have one coming up in my thought right now. Hold on. I just lost it. Let's see. So let me think. Here, can you come back to me? I was literally in the middle of like a thought process. Was holding one, but I gotta come back to it.
Sure. Kellen, I think you just posted a question. If you want to come off of mute and ask.
Yes. So my question is, how does one even begin to solve part of a much larger problem? For example, I'm quite passionate about green energy, but obviously I'm not going to be able to solve the whole industry on my own. So how does one choose a smaller section of that topic in order to focus their time?
Yeah, it's a really good question. The way I answer this is everything big starts small, right? And so, even if you think about just Uber started with black cars, San Francisco, and it went from there. And so, the way I would think about this is the problem is not green energy, right? The problem might be some really, really small subset of energy broadly. And what is the solution you can devise that's going to attack one very targeted element of that problem? And often you can divide it. It obviously depends on the type of company, but often you can divide it by geography. You can divide it by market segment, and you can just really drill in to something. And actually, the best companies start like that, right? If you try and do everything at once, I still can't think of a company that has succeeded trying to do that. Even Amazon started with, I think, books, right? And so everything starts really small. And I would just encourage you to figure out what is that thing within energy that you think is completely broken that you want to work on. And I guarantee you, if that succeeds, you will find tangential applications for your technology that will naturally allow it to scale.
Thank you. And I appreciate the Nate Silver quote earlier.
Thank you.
So I think Eric Jin has a question. I think he's ready now. Go ahead, Eric.
Okay, so I was always wondering, I know that a lot of like private equity and venture capital, it's all relationship based, like kind of away from all those like kind of technical hedge funds and stuff. And I'm just wondering, like, when you guys are in investing, or I mean, sourcing these deals, what is the usual competitive edge when you're trying to compete, like in an auction for buying one of these companies that's outside of your like network? When you see a company that you think may do like really well, how do you like go about getting those kind of companies?
Yeah, it's a good question. I mean, often people think my job is like Shark Tank, where the entrepreneur comes in and pitches and we have all the power as the funders. It's actually the complete opposite. You know, we have to go to them. And usually the best companies are often in demand. And so there are multiple investors who have stumbled across the same entrepreneur. And so we are competing against them. So I often say other venture capitalists are frenemies. You know, they're friends once we're in the deal together, but they're enemies when we're all trying to get into it. A lot of these companies are not raising that much money. So if you think about a traditional seed or Series A or Series B, which is the lingo we use for the early stage rounds, these are in the single digit millions. A lot of firms need to do that full amount to get to their ownership requirements, which means there's some tension there, right? Like 6 firms can't do the same Series A. And so we all have to compete with our own competitive advantages. Our competitive advantage is, or at least our pitch, is that we believe we are an extremely global firm. You know, a lot of entrepreneurs appreciate that element. You know, what you brought up earlier, Vishal, about our board partner group is a huge plus for a lot of entrepreneurs. They want to know that if they have a regulatory challenge, they can call on some very senior political type folks or the equivalent on the business side. And the third is our entrepreneurs often go to vouch for us, you know, which is probably the most powerful of all of them, where a guy like Vlad from Robinhood will call, you know, a Series A entrepreneur and be like, we've worked with Sheel and his team since the seed, and we had a good experience. And so you guys should, you know, you shouldn't think twice. Like that sort of reference call actually goes a long way. But a lot of folks do that. And so it's you know, it's a competition. And then often it might come down to valuation. Like I might offer X and somebody else might offer X times 1.2, right? And then they'll beat me. So this job is a lot of sales, you know? I mean, it's diligence, it's sales, it's sort of everything.
So I hope, Eric, I hope that answered your question. Rishi, if you want to come off of mute and read your question.
Hi, Sheel. Thank you for talking to us today. I was wondering if you'd be able to talk about some more non-traditional paths into venture capital, paths other than IB.
So I actually think investment banking is not a traditional path into venture capital. I mean, most firms don't necessarily look at investment bankers as the place where they source their employees. There actually is no traditional path into venture. There is a little bit more traditional path into private equity. And that is true that a lot of, say, private equity associates come from investment banking, but that's not true in venture capital. In venture capital, there are a few points of entry usually. And just to simplify it, let's say junior and senior. The senior points of entry are usually folks who have started and sold successful businesses and then become partners at venture capital firms. The junior side are folks who are just intellectually curious, have strong intuition, and hustle. I mean, you know, a lot of this job is hustling to try and find the next deal. That type of background can come from anywhere. Maybe it's investment banking, but it could be from the startup world. I mean, it could be journalist. It could be, you know, from the consulting world. I mean, it could have been somebody who worked at a big tech company. Like, there actually is no set path for a venture capitalist, especially at the junior level. And then once you get in, then it's all about what you do from there, right? It's all about what great opportunities are you able to surface? Are you able to get into those deals? And will they ultimately become good companies? At the end of the day, your future as a venture capitalist is often hitched to the success of your founders, you know? So I can be really smart, but if all of the companies I invest in fail, I'm probably not going to be a venture capitalist for very long. Whereas the flip side is actually also true. I may not be smart at all, but if I got lucky and happened to invest in a multi-billion-dollar company, I'll probably be a venture capitalist for a while. So it can often take a long time to figure out whether you're good or not.
That makes a lot of sense. Thank you. And I was also wondering if you could speak a little bit more about your early startup experience back in college or before you.
Yeah, so I worked at a company called Skybox. Skybox was putting satellites in space for high resolution imagery and video. Okay. And it was bought by Google, spun out and bought by a company called Planet Labs. But essentially think of it as Google Earth-ish, right? I mean, this imagery from satellites emerges into places like Google Earth. And it was an amazing experience. I was their first non-engineer. I was a business guy trying to figure out what are we selling, who are we selling it to, how are we pricing it, et cetera, et cetera. It was an amazing experience. It was very difficult because we had not yet put a satellite in space. And so I had to sell something that didn't exist yet. I had to go to customers and be like, yeah, when we have the satellite, it will look like this, but we would like a purchase order now because it will fill up quickly, right? I mean, that was like the pitch. And so it was difficult. We were able to get a few customers, which ultimately led us to get funding and whatnot. But it also made me realize that I think I'm more of I would rather work with many companies at once, as opposed to really diving deep on one. But some people have the opposite personality.
So I actually have a question before I hand it over to someone. So because you're very well traveled and been around the world and work with these global companies, I was just wondering if you feel like there is a base for Bitcoin to become a medium of exchange, like a currency. Do you think that that's still possible and viable? I mean, I'm just asking this question because I've always, kind of been interested in the technology, and I think it's been very disruptive ever since it's come out. But obviously, it's had its ups and downs, and people say this and that. So I just wanted your opinion.
So I used to be a huge bull on Bitcoin, and then I used to write about it. I used to talk about it, and then I ended up becoming less excited by it as a protocol. I mean, a lot of people were talking about it as a currency, and some people were talking about it as a protocol. I did not see over the last 8 years, I haven't really seen a company come out using the blockchain protocol, right? Or using the blockchain generally to solve an interesting problem. To me, it felt like a technology in search of a solution. So that really leaves the element of Bitcoin as, some may say, a currency, others may say a commodity, or essentially something that is a hedge, if you will, akin to gold. And that is probably the most interesting use case. It's still pretty volatile. So I think the argument that it could replace a currency is probably only true for like the bottom 5% of currencies in the world that are extremely volatile. But a lot of people are moving into it. I mean, PayPal, I think, just announced that they're buying 50 million of Bitcoin or something like that, maybe more. And so I think folks, especially in the current environment where there is heavy printing of money, folks are like, kind of need a hedge. This is the easiest hedge to purchase. It's easier to hold a lot of Bitcoin than it is to hold gold bricks in your wallet, And so let's see.
Thanks. I think Himesh has a question. If you want to come off of mute and answer, Himesh. All right, question. Ask the question.
Hey, can you guys hear me?
Yes.
Okay, so I had a question. So I know Amplo's been around since 2017, and you guys probably get to firsthand experience and see the growing pains that your portfolio companies are now experiencing as they scale up. So I want to ask if whether or not you guys would also experience the same types of growing pains and, share them as your portfolio companies, and, what kind of challenges are you guys expected to see in the future,
Yeah, I think, look, every company, people often think it's up and to the right, but nothing is ever up and to the right. I mean, literally every company has challenges, often existential challenges, and often catastrophic challenges, right? And those are the ones that define a company. And, I've sat through some of them. I mean, like, we've had companies that have totally failed because they weren't able to make it on the other side. We've had companies that we thought were going to fail, but somehow managed to turn it around. I mean, right during COVID, there was a very stressful example. So Robinhood, I don't know how many of you guys use Robinhood. It's our best known company, the stock trading app. In March, the stock markets were totally melting. And a ton of people were trading on Robinhood. The volumes were all-time highs. And we had an outage. I mean, it was like the biggest outage we've ever had in the company's history. And it was very stressful. I mean, I was getting calls from everybody, and I'm not even full-time in the company, but like I was getting calls from pissed off customers. And that happened not for one day, but for, I think it was 2.5 days or something. And it was due to just record load. Our servers had, I think, buffer, but not that much buffer, not as much buffer as we anticipated, or as we should have anticipated. Luckily, that's fixed. But there were a few days where I was like, is this catastrophic for the company, right? I mean, like, did we permanently lose the trust of customers? And ironically, our customer growth that month was actually the highest it's ever been. So you would have thought that, people would have fled, but a lot of people had outages actually that month. I think almost every broker did. So anyway, it's a story to give you examples of the types of things that our companies will often face. Everyone has their own challenge. And as we live through them and learn from them, we'll often share the experiences with the next generation of our founders. So hopefully they don't repeat the mistakes. But like that mistake, it's actually not just a Robinhood issue, it's a general issue, which is you have to have redundancies and you have to have on your servers insane capacity, because you never know when you might actually go through the roof, right? You have to often plan for the best, not just plan for the worst. And so, I mean, that's something that you can actually apply to almost every company. So those types of lessons we will impart. And often we don't know everything either because we haven't lived through everything. And so we're also just learning on the fly sometimes.
Okay, thank you.
Thank you, Sheel. So actually, I have one more question, and then I'm going to hand it off to Vaishnav, and I think that'll be our last question for today. If you don't mind, Sheel, could you tell us, how you came to meet, I guess, the Robinhood founders, the Robinhood team, and then ended up investing in it?
Yeah, so they were classmates. So the Robinhood founders were a couple years my senior at Stanford. Well, I didn't actually know them in college. I met them after through a mutual friend. And, I was just really impressed with them. They were mission driven from day one. They were inspired by the Occupy Wall Street movement, where you may remember, folks were protesting in the streets of New York. And largely, they just thought it was un-American that if you're rich in this country, it's easy to get richer. But if you're not, account minimums are too high, fees eat up a higher portion of your net worth, you don't have access to the same assets as the rich, et cetera, et cetera, et cetera. And they just thought that was unfair. And so they wanted to democratize access to financial services. And the first medium that they saw to attack that problem with was the brokerage industry. And, they studied the brokerage industry and they realized that there was this cartel that had emerged where all of these companies, Fidelity, TD, Ameritrade, Schwab, E-Trade, they were all charging like $7.95 or $10.95 or whatever it was per trade. That was a legacy of when trading used to be offline, because there used to be a cost associated with trading, which was the people, the time of the people. But when trading moved online, that cost went to zero. and now is actually negative. These brokers actually make money every time you trade. But all of them were used to charging the $7.95 fee, and all the customers used to paying the $7.95 fee. So this cartel had emerged, and the Robinhood guys were like, that's unfair, and so let's just get rid of this. Let's just create an awesome product with a great UI and make it free, and we'll make money the 1,000 other ways the brokers make money, but we'll just get rid of that one. And that was amazing. I mean, they knew exactly how they were going to make money from day one. The product was beautiful. They had tons of people on their wait list before they even launched. And to me, that was my indication that there may be demand for this product prior to it even launching. So that was what, caused me to invest. And then we've continuously invest since. And I think we'll hold the company for a long time, because I think even after it goes public, I think this could be the sort of the Amazon for financial services, where it's not just stock trading or option trading or now crypto trading. It could be all the other products that you see when you walk into a bank. Hopefully one day you can get on Amazon, on Robinhood, and it'll be cheaper. It'll be better user interface, and it'll be just generally cleaner.
Yeah, thank you. I mean, I just remember when I first came across it and I learned that it was free, I was like, no way. And I signed up for it. And it was, I've been using it ever since. And I think it's been pretty amazing what the company has done so far. So Vaishnav, I'm going to hand it off to you. And then if you can ask the last question here.
Sure. So I'm actually going to be reading a question from Dhruv Kora. So he asks for your opinion on platforms like WeFunder, which are crowdsourcing platforms that directly connect startup founders with investors, and to just get your outlook on, the use of these products and these platforms.
So I think crowdfunding platforms, and there are a ton of them, Kickstarter, et cetera,
Right.
that I think these platforms are better for the person putting the product on the platform than they are for the investor. So I think it's a great way to raise capital if you're the entrepreneur, let's say, or the product creator, because you can raise capital in small pieces. Often it's non-dilutive. They're giving you, it's sort of like a pre-order as opposed to taking a portion of your company, and great things can get off the ground that way. As an investor, startup investing is hard. Less than 0.001% of companies become billion-dollar companies. And if you think about even beyond that, it's even lower. It's far more likely that the company is going to be a zero than it's going to even return your capital. And often many of the very best ones will go and try and find venture capital dollars, And so you really have to ask yourself as an investor, why am I seeing this on the crowdfunding platform? Did I stumble across gold on this platform? Or, is this me essentially trying to buy a lottery ticket? And as long as you're okay with buying a lottery ticket, then it's a great place to invest. But if you're really looking for a place to generate returns, I just think you have to be careful.
Thank you.
All right. Well, that concludes our panel number 10 here at our PEAC's Leadership and Service Series. Thank you, everyone, for joining us. And again, thank you, Mr. Sheel Tyle, for joining us today. We really appreciate it. We will be sending out a survey form after this to just get your feedback, what questions you'd like to ask next time. And if you'd like to view any of our previous recordings, please visit peakusa.org or our YouTube channel for our other panels as well. Thanks, everyone, and have a great day.
Thanks, guys, and feel free to reach out to me if I can ever be of help to any of you. Take care.
Thanks, Sheel. See you.
Vishal, I actually had a question for you. Is there a way to sign up for like a mailing list or something so we get informed every time there's another meeting or another speaker?
Yeah, if you can just, so I actually think on our website there used to be a form. I don't know what happened to it, but usually we have registration forms for each speaker. If you want to drop your email in the chat, I will add you to our list and stuff.
Okay.
Question, Rishi.
Hey, Rishi, how'd you find out about this, by the way?
I'm